All right, we got connection back. Let's see if we can go live here. Oh boy, what happened? All right, I see that I am live. Sorry, guys, I had a connection issue, and then I thought I restarted the stream, but I didn't. Anyway, so back here with another episode of Bitcoin and Markets. Sorry about that. Technical difficulties hasn't happened in a while, but yeah, lost the connection, and we are back. Happy Monday, everybody. Hope you had a good Monday or weekend out there, and hope you're having a good start to your week. Every Monday is Bitcoin Fundamentals Report Day, where I put out a newsletter that goes over all the different sectors of Bitcoin. So, welcome if you're joining me for the first time. I'm going out on Telegram, YouTube, and Rumble, and Twitter, actually. So, if you're watching on Twitter, jump over there to YouTube and Rumble. You guys can like, comment, subscribe, and discuss. So, you can put your comments there, and I'll see them throughout the live stream. All right. So, let's get right into it. Let's share the screen. Bitcoinandmarkets.com. That's my home website. All my content goes on here, and I do this weekly newsletter. I've been doing it for a very long time. I've never sold a scam. I'm a pure Bitcoiner. I'm contrarian in the Bitcoin space in a lot of respects, but the newsletter covers all sorts of stuff in Bitcoin. So also check out bmpro.substack.com. This is where I write for Bitcoin Magazine. Okay, let's jump into it. Bitcoin Fundamentals Report number 294. Quick navigation. If you guys get the email, you come to the website, you can quickly go to the section you want. You can see these are all the different sections that I put out: headlines, macro, price analysis, mining, and layer 2. And let me just make sure I have everything unmuted. Okay, sounds good, or it looks good. Also, guys, I'm coming down with a little congestion here, so my voice might not sound the best, but we're working through it. We got to do it every Monday. So, okay, snapshot of Bitcoin. Weekly trend, max bearishness. I think we're getting close to something, some bottom, some reversal. We'll take a look at the price charts. We'll take a look at the oversold conditions. We'll take a look at several things in regards to price. But we are right now at max bearishness. There's people talking about Germany selling Bitcoin, people talking about Mt. Gox selling Bitcoin. None of this is really 100%. Okay, we do know that Germany sold a little bit of Bitcoin, but not a lot, not everything they have, and there's nothing to say that they'll continue. And Mt. Gox, we've heard these rumors over and over again, and also there's nothing to say that they will dump anyway. A lot of these people are longtime holders. There's a percent that will sell for sure, but many of them will not. But right now we are in max bearishness. Media sentiment is kind of indifferent. Not a ton going on out there. I mean, we do have Trump every once in a while talking about Bitcoin and Bitcoin mining. Biden, there were some leaks from the Biden administration a couple weeks ago about meeting to talk about the Bitcoin industry staying in the United States. But right now, over the last week, there's been pretty much indifference. Not a lot of talk that I've seen, at least out there in the mainstream media. Network traffic is very low. We'll take a look at mempool, hash rate, all that stuff. And the mining industry, it's struggling and shifting a little bit. We'll talk about AI and how these miners are getting dipping their toes into the AI space. Price section for the snapshot. At the time of writing, it was 60,283, and I'm looking right now at a live price, and it did dip below 60,000, but it's back above 60,000 right now. Really, really bad week. Last week I think was minus 6%. This week is minus 9%. This is issue to issue, so this is, you can tell where this max bearishness is coming from. But of course, it's always darkest before dawn, right? So it's always the most bearish right before we bounce. Market cap, still over $1 trillion, but it's 1.188 trillion Satoshis per dollar, 1658. 1 finny, that's my preferred denomination of Bitcoin. 1/10,000th of Bitcoin, right in the middle of the decimal places, is $6.03. Previous difficulty adjustment was, let's see, 9 days till the next one. So what is that? About 5 days ago, 4 or 5 days ago. Almost even. I mean, basically even. 0.05%. The next estimated adjustment is, next adjustment is estimated to be -3%, and that is in about 9 days. Mempool down on the week, but fees are down much more. We'll take a look at fees. We'll take a look at the mempool. Fees for the next block, 93 cents or 11 sats per virtual byte. Low priority fee is 76 cents. Lightning Network capacity, this capacity is doing well the last couple weeks. Excuse me there. Tried to mute that when I cough. Like I said, I'm feeling a little under the weather. But here we go. Lightning Network capacity over 5,000 again. Last couple weeks have been very positive. I think we're up about 100 or maybe even 200 Bitcoins in the last month in the Lightning Network. So that's good. Channels are down though. Channels keep falling while the number of Bitcoins keeps rising. That spells centralization, right? Or at least hub and spoke, distributed and not decentralized. So Lightning is evolving. Lightning is a good thing to continue to work on, but right now it's just not catching on. I do have a layer 2 section down below that we will talk about, a new layer 2 proposal by Barack. But this is where a lot of the innovation is happening. If you go back on, let's say 4 years, Lightning Network was where all the innovation is happening. Now it's in all sorts of different layer 2s. It's expanded out. So layer 2 is where the innovation is going on. Okay, in case you missed it, this is all my stuff that I put out over the last week. I did this morning actually get out a podcast. So I turned Friday's live stream into a podcast. So you can find that by just searching Bitcoin and markets on any podcast app, including Fountain. My blog, the latest one is this demographic collapse post. All right, let's get into headlines. Michael Dell's Bitcoin post sparks massive BTC purchase speculations. And I linked to the story that I'm quoting from in the bullet point. On June 21st, Dell tweeted, "Scarcity creates value," a phrase often associated with Bitcoin due to its supply cap of 21 million tokens against rising demand. His tweet quickly drew attention of Michael Saylor, the prominent advocate for Bitcoin as a corporate treasury asset. So you can see here, you guys probably saw this. Michael Saylor is Bitcoin is digital scarcity. Michael Dell's net worth is approximately 120 billion to Michael Saylor's approximately 5 billion. Completely different class of billionaire. Quote, "So far in 2024, Dell has cashed out 2.1 billion while retaining 58% of the company's ownership. In other words, he has excess capital available to deploy into the Bitcoin market, particularly against the backdrop of rising US debt, which may negatively impact the US dollar's value in the future. Also, Dell's company has 5 billion in cash on their balance sheet. It is possible that Michael Dell either buys Bitcoin personally or will put some of his company's balance sheet or both. So either Dell straight up with their 5 billion in cash or Michael Dell himself will be buying Bitcoin, or neither. This could just be kind of a troll shit post, but I don't think so. I think there is something going on under the surface here. Michael Dell has been involved with Bitcoin for a long time. Dell Computers famously started accepting Bitcoin in late 2014. So he knows about Bitcoin. He's been in Bitcoin for a long time. All right, next headline. Bitcoin becomes the largest super PAC. This was the tweet from Jameson Lopp. And let's see, I'll bring this up and I'll share this tab. Okay, so we have here Fairshake that supports Bitcoin interests. It has $106 million of cash on hand. The next one, Never Back Down, supports Ron DeSantis. SMP supports Senate Democrats. Make America Great Again supports Donald Trump. So you can see that these are both Democrat and Republican super PACs. And the largest super PAC right now is the Bitcoin super PAC. All right, back to the report. If you don't think that Bitcoin if you didn't think that Bitcoin was an actual big deal this election, check this out. The people want Bitcoin. The money interests want Bitcoin. The banks even want Bitcoin. So the reason why I say the banks even want Bitcoin is they're trying to push through, the changing SAB 121, which got vetoed by Biden. But that would allow banks to custody Bitcoin for customers. They want to custody Bitcoin. You think they didn't have lobbyists involved there to get it past the House and the Senate? Of course they did. The bankers want access to Bitcoin. It is the globalists. The only players in the entire world that don't want Bitcoin are the authoritarians, and they're losing ground everywhere. We see this in Europe. We see this in the United States. They are the far right is just like anti-authoritarian at this point, and the far right are gaining everywhere. If you just read the headlines or listen to the speeches by the globalist leaders with that definition in mind, that far right just means anti-authoritarian, they're on the rise everywhere. The only group of people that don't want it are the globalists, and they are losing. All right, let's go on to the next headline. SEC ends investigation into Ethereum. This was big news last week, but coming out on Monday, I revamped the news from last week and the weekend. So just in, the SEC permanently suspends its investigation into Ethereum. My initial response was, this is, what was my tweet? Like, this was a sad day for this is a sad day or something like that. Yeah, this is just bad. But this story seems slightly odd, even if you don't understand why ETH is such a scam. Just before this news dropped, it was announced that the SEC's crypto enforcement chief was leaving the agency. So the crypto enforcement chief, who's been there, I think, 9 years, he leaves, and all of a sudden they dropped their investigation into Ethereum. So like, he must have been an anti-Ethereum voice, anti-crypto voice, and they booted him. And now the SEC is dropping its investigation. I'm the first one to say that the SEC fails at consumer protection. So I don't want to hear people saying that I'm trying to back up the SEC. I'm saying we're getting the worst of both worlds here. Okay. It's not only that the SEC still exists. This didn't get rid of the SEC or anything, but it's basically giving the scams a green light. It's compounded. Of course, I don't want the SEC is inefficient. It's part of the government that regulations. I'm in favor of as small a government as possible. But in this case right here, they are giving it a green light. And that's going to be hurtful to a lot of people. But I guess people have to learn their lesson, right? Anyway, we've talked about this in the past. Let's move on to macro headlines. ECB continues their digital euro madness with latest progress report, and I linked to it here in the bullet point. Quoting from this report, following the completion of the digital euro investigation phase launched by the Eurosystem in 2021, on 18 October 2023, the Governing Council of the ECB approved the launch of a 2-year preparation phase. The aim of the preparation phase, which will last until October of 2025, is to build on the findings of the previous phase and lay the foundations for potential issuance of a digital euro. So a lot of people are saying this is a given that they're going to launch, I think they probably will launch something like this, but at least they're careful to use these potential here, talking about that this isn't for sure. It involves finalizing the digital euro rulebook by defining a single set of rules to be applied to payments in digital euro and selecting providers that could potentially develop a digital euro platform and infrastructure. So see, they are very, very early in this. I don't think they understand the scale of what they're suggesting, the scale of what CBDCs are. So if people if you're new to watching my content, let's see, we have 139 people watching, welcome. If you're unfamiliar with my take on CBDCs, is it creates a whole new form of money. So it's not just fiat. I mean, it is fiat, but it's not just the fiat that we have now. Okay, we technically don't have pure fiat. We technically have credit money. And you can go look up in Mises and find out what he has to say about credit money. He agrees with me. So all you Austrians who don't want to call it credit money and want to call it fiat, Mises does not agree with you. But anyway, so we don't have pure fiat today. We have credit money. And they're proposing fiat money. So they're proposing an entirely new form of money. And I don't think they realize that. I mean, if I realize it, that I'm just a dum dum. So probably there are people working at the ECB that realize that it's a whole new form of money, but maybe not. I mean, they're completely captured mentally. They're completely corrupted. Their mind has been corrupted by communism and Marxism. So I don't know if they know this really, but it is a whole new form of money, going from credit-based money to pure fiat money. And if you want to see hyperinflation very quickly, that's going to come when they launch a retail CBDC. That's what they're looking at. Incredible inflation almost immediately. Okay. Selecting providers that could potentially build, we talked about that. As part of this phase, the Eurosystem is also carrying out further testing and experimentation and a deeper dive into technical aspects of the digital euro. So, again, they don't really know what they're doing, um, which, as its such as its offline functionality and a testing and rollout plan. In CBDC lingo, there are two different types: a wholesale CBDC used for bank to bank transfers and settlement, basically an overly complex version of Fedwire. Oh, sorry about that. Number two, so wholesale CBDC. Or number two, a retail CBDC, which is a full-blown dystopian version of control and inflation. It is telling that the ECB is going for the latter here. Also interesting, the ECB is likely shaking in their boots about the existential decline in the use of the euro in international payments and receipts to approximately 12%. So here is, I talked about this last week or 2 weeks ago. These are SWIFT payments, but if you go back here to 2019, it was like 30 some percent. Now it's 12%. The euro continues to decline in usage on international payments and invoicing. So the euro is in deep, deep trouble. And they have to launch something like the CBDC to stay relevant. That's what they're thinking as well. But it's just going to be disastrous for them. I mean, you know how disastrous it was when John Law wrecked the French banking system and the French currency. That's kind of what they're aiming to do here. It could be that drastic. Completely destroy the euro. Not good. Not good for Europe. Bottom line, from this report, so the European report on CBDCs, they are still working and will come to their next decision point in October of 2025. A long way off. A lot can happen by then. Okay, next headline. U.S. consumer and world's last hope for avoiding a global recession is slowing. Or I should have said hurting. U.S. consumer is hurting. Last week, U.S. retail sales came out and were a huge miss of expectations. They clocked in at 0.1% month over month versus 0.3% expected. April was revised lower by 0.2 of a point from 0 to -2. So adjusting for inflation and considering the revision to April, retail sales for May were actually -4%. This is on top of price cuts from major U.S. retailers like Walmart, Target, Kohl's, and Amazon. And here is this image of all the different parts of retail sales. Looks like the major positive ones were motor vehicle and parts dealers, and this pink color, which is non-store retailers. But barely over positive. So the economy is slowing down. I think a lot of people are flip-flopping here once again on their calls for recession, or what they think is going to come in the next 6 months. Say, is there going to be a recession? Is the Fed going to cut rates? People keep flip-flopping. I've been fairly consistent. I have updated my calls when I've admitted that they didn't come out with my probabilities, and I've updated them. but I haven't been flip-flopping. Every 2 months, I go, okay, we're not going to have recession. Okay, yeah, we are going to have recession. Okay, Fed's going to cut. No, Fed's not going to cut. So there's a lot of macro people out there that do that constantly, and they constantly get things wrong. But anyways, that's all for retail sales. The U.S. economy is not doing too well, and who we'll get into it with the China story down below, but the American consumer is extremely important in the global economy. Love America or hate America, the U.S. consumer is the most important thing, basically. And if they're having trouble, the globe is going to go into a recession. Okay, China warns of possible trade war with the EU. Deglobalization is real, guys. I've been telling you for years that this process will only continue. Now it is China versus the EU. Just imagine what will happen when Trump gets reelected. So China warns of possible trade war with the EU, quoting from this Reuters article. Beijing warned on Friday that escalating frictions with the European Union over electric vehicle imports could trigger a trade war, as Germany's economy minister arrived in the Chinese capital with the proposed tariffs high on his agenda. Robert Habeck's 3-day trip to China is the first by a senior European official since Brussels proposed hefty duties on imports of China's electric vehicles to combat excessive subsidies. That has unleashed countermeasures by China and harsh criticism from Chinese leaders. This week alone, Chinese automakers urged Beijing to hike tariffs on imported European gasoline-powered cars. So those old ICE cars, man, they're going to hike the tariffs on them. And the government launched a dumping probe into EU pork imports in retaliation for the EU Commission's move. I talked about this topic on a live stream last week, and I used this article. EU tariffs will be up to 38% on Chinese-made EVs. This move cannot be taken in isolation. It's like a snowball rolling downhill. As quoted above, China is already looking to retaliate. Now imagine you are CEO of a large company with vulnerable supply chains to this kind of trade war. Will you continue if this isn't... what am I trying to say? Will you continue if this is happening? Which side would you choose to be on? So are you... if you're a large company and you have a large supply chain and there's certain steps that go on in China, are you going to leave your stuff in China? Are you going to maybe pull it out to India or to Indonesia or something like that? So which side are they going to fall on? Are they going to be friends with China, or are they going to be friends with the US and the West? China is a low-income country with a collapsing economic model. They have a communist regime and a closed capital account. China does not have customers for your products. So if you're a big product manufacturer, do you want to stay on China's good side? Why? They're not buying your stuff. They are making it, but you can make it elsewhere. The people that are buying it are the US consumer. They've been trying to boost domestic consumption for a decade with no progress. Of course, the large company that wants to sell things will side with the US consumer. Okay, so that is the headlines for macro. Let's go on to price. Bitcoin price. That's what everyone probably wants to know. And right now, let's go to the live chart and zoom in here a little bit. We are dipping hard here. 59,759 on Bitstamp. Daily RSI at 24. This is extremely oversold. I mean, it did get more oversold back here August of 2023, but it's still oversold. And it doesn't get oversold all that often, and they always happen on the bottoms. So this is a bottom in formation right here, but where will it stop? That's what we need to know for the price of Bitcoin. And also, well, let's get back to the report, and then we'll talk some more about it. These are the hard times that make great hodlers. And before I start this, actually, let me go and check the chat. We're on, Ansel. Okay. Sorry, I think I messed up that beginning. John Delaney back with us. Fundies are all that's left, like hedge funds. In the Bitcoin space, or in the Bitcoin markets, or what are you talking about, John? Let me check Telegram. Make sure I'm still live over there. I am live. Any comments? No. All right. All right. Well, let's continue here. What's up, Rizzo? All right. Let's continue with the Bitcoin charts. These are the hard times that make great hodlers. So hodling ain't easy, people. If you're brand new, this is nothing. I mean, imagine like an exchange getting hacked and price drops 50%. That's happened in Bitcoin. This dip is nothing right here, and we're oversold on the daily. So just strap in, DCA, buy when Bitcoin is oversold. Okay, one of the things that is making this period particularly difficult psychologically is that our expectations were so elevated. And I'm guilty of that too. Saying, oh, we're going to be at 100K by such and such a day. Oh, we're going to be 150K. Oh my gosh, this could be the super cycle. Oh, blah, blah, blah. So our expectations have been very elevated, and that's why it was psychologically difficult. The same thing happened at the end of last bull market. So if we go to the chart here again, and we go to the weekly, and we see the last bull market, people were expecting this, at least to 100K, because of the way that the bull markets have gone in the past. That's what people were expecting. That didn't happen, of course. And so that was psychologically very difficult. I think this was the worst bear market I have been through. But right now, this is also a psychologically trying time because everybody thought it was going to be like this. And it is not. So yeah, we will continue up. Let's see what else I have to say on the report. So the fundamentals are still extremely strong. The U.S. might very well pivot to a Bitcoin issue, and the institutional demand is here. The 14 billion of inflows to the ETF were record-breaking, but only the tip of the iceberg. Bitcoin has painfully grinded lower, but when viewed in the perspective of our consolidation range, the entire bull market move so far, this is peanuts. RSI also tapped oversold for the first time since August. And we can have a couple scenarios. So these are a couple scenarios I talk about. Price could close oversold and bounce hard. All right. That's one possible scenario. Another possible scenario is we get a weak bounce, and later this week, price goes lower, but RSI does not go lower. So we form a bearish divergence. I do not see price getting below the 200-day moving average. So here we go, 57,564. We're already at 59.3, but that 200-day moving average is a pretty strong, important level in Bitcoin and in all markets. All trading, the 200-day moving average is important, and we are very oversold. I can't stress that enough. Being this oversold, it's not like Bitcoin can fall forever. Okay, RSI can't continue to fall to 1 or 2. It's going to bounce. When it's oversold, it will bounce. Now the question is if it's a big bounce or a weak bounce. Right now, it's very strong to the downside, 59,100 already again. So the move down is very strong. We'll probably have a fairly significant bounce. Okay, moving on. The 4-hour RSI is also extremely oversold, and also from lowest since August of 2023. And you can see this RSI here all the way over to August of 2023, and it's even lower now. Let's go to the live chart. Oh boy, what do we got here? Just falling off a cliff. 23 on the daily. Let's go to the 4-hour. 4-hour is 12. Oh my goodness. That is pretty low. Let's see if we can go back to here. Where was it back here? It got down to 5 on the 4-hour. Wow. So we're not there yet, but this is almost unprecedented in Bitcoin history on the 4 hour, how low it is. And the daily is considerably oversold. So we are watching for a bounce at any moment. Okay, these oversold conditions will get corrected. This is a major milestone for price. These oversold conditions do not happen very often. And just look at when they do happen. They happen at swing lows. Okay, so we are forming a swing low. Where that swing low happens, it could be 57, it could be 59. I don't know, but it is forming a swing low. The weekly RSI is beautifully reset to the neutral midline. Last time it was there, the price was 27,000. Therefore, we are resetting from a much higher level. So you see weekly RSI coming back down to this mid level and rallying from here. It's going to take a long time to get this back into overbought territory in the bull market. So we're resetting to a very good level, and it's only at 59,000. So that's really good. Liquidation heat map shows 3 billion plus in very juicy liquidations up at 72K. There is not a lot of liquidity immediately above the price, though, since we have been almost straight down over the last couple of weeks, giving no time for those shorts to come in. If we check back tomorrow, there will likely be more liquidity above the price to help set it on its way to 72,000. So these levels are like magnets for price, mainly because, they're just like areas of liquidity, and the price seeks out liquidity. And so this yellow area is saying, hey guys, there's a ton of liquidations. There's a ton of liquidity right here to be made. Come on up here. But to get there, there's not a lot of stuff here to pull the price with cascading liquidations up. So this is juicy, but it's going to take a little while to get up there. Okay. Overall, price is not fun right now. I don't know what exact level the bounce will come, but it will come. Perhaps at the 200-day moving average, which is 57.5, which also happens to be the bottom of the daily Ichimoku cloud. The round number of 60 also might provide some support that we are expecting right now, being near the bottom of the range. So that didn't happen. Let's go back to the chart and let me bring up this range. So, we are just at the bottom of this range. We're just repeating what we were at early May. And we are way more oversold. So a bounce here, it's not like we're crashing. Yes, we're crashing 5% on the day, but it's not like some sort of bear market start to a bear market. Look back here. This was 7% in this day. That was January 12th, the day after the ETF launch. This big one that we were talking about in August, that was 7% as well. So, we've had bigger down days in the bull market already. So this is not like anything to be super concerned about. Okay. What did I say? This is a great opportunity to buy the dip if you're interested. I expect a bounce to come later this week or next, and for the price to rally throughout July. All right, so that's it for price. Let me take a look at the comments here. Price is dead. Yeah, it's dead, John, but it's not, it's oversold. And the way that markets work, they don't just go in a straight line forever. It's not like it's going to go down forever. We're going to have rallies and we're going to have dips. And it's nobody right now is talking about the end of the bull market. So let me even measure out what this total dip has been since the top. It's the same as here. So if we just go like this, that's 20%. And this is 20%. This is less than 20% because it didn't get as high and it didn't go as low. It's 17%. This is a beautiful consolidation. August of 2023, people might have been saying price is dead here, right here too. Yeah, it took a couple months. I don't think it's going to take that long here, but it took a couple months. But then it really rallied hard. So price is not dead. It just sucks right now. Okay, what other comments? Anything from Telegram? As you guys can probably tell, I'm feeling under the weather, have a cough, and have stuffy nose. So excuse the voice. Hodovetsky says, "You don't think we can see the stream on Telegram?" What? Okay. Baron, you set him straight. Thank you. Yeah, sorry about that, guys. When I first started the stream, somehow the connection went out like in the first 10 seconds. So I don't know what happened, but we're back with it. We figured it out. Okay, let's continue. Bitcoin mining headlines. Bitcoin miner Hut 8 lands $150 million investment amid AI boom. Tech-focused investment manager Cotu Management will make a $150 million investment into the Bitcoin miner Hut 8 Corp. As investors continue to capitalize on artificial intelligence boom. On June 24th, Hut 8 revealed the multi-million dollar investment owned by billionaire Felipe Lafont, which will take place through a convertible note. In the crypto industry, Hut 8 was one of the earliest to get involved in the high-performance computing business, which is now being sought after to power generative AI models and applications. Other cryptocurrency miners, including Core Scientific, TeraWulf, have also become involved in hosting data centers or striking deals with AI companies. Both of the aforementioned companies saw upticks in their stock prices after making AI-focused deals. So this AI-focused stuff is very reminiscent of Ethereum mining. So Ethereum mining was GPU based. These AI things are GPU based. There was a lot of miners that had Bitcoin ASICs and GPUs to mine both Bitcoin and Ethereum. So there was a lot of that left over. It's a perfect fit. It really is. So we'll see. That this is another thing. Like the demonization of Bitcoin mining is so far gone. Bitcoin miners are good for the environment. Bitcoin miners are good for the grid. Bitcoin miners are good for jobs. Bitcoin miners are good for everything. They're also good for AI, which is good for productivity, which, we can debate about that. But AI is supposed to be good. It's supposed to be what we need to do to get out of all these social problems or economic problems. And so Bitcoin mining is like so far beyond being demonized anymore. That's also a very big change in the fundamentals of Bitcoin. And I just had a sinking feeling that I was muted, and I'm not. Okay, good. Next story: Bitcoin miners sell 30,000 bitcoins. Miner revenue dips to 14-year low. In June, Bitcoin miners have sold off 30,000 bitcoins so far, the most this year. Not the most ever. This isn't a very clear chart here, but you can see that it has been dipping. And this is from Into the Block. And it was tweeted by Carl B. Menger. It's not very clear, but below that we can see the crypto quant, and it's not a new trend at all. So miner reserves have been coming down since way before the bull market ever started. They have been coming down big time since the ETFs as well. So this is nothing really new. If anything, this trend is kind of slowing. Okay. Notice the miners' Bitcoin balance has been falling consistently since July of 2022, long before the eventual bottom with FTX. Since then, miners' Bitcoin balance has gone from 1.864 million to 1.816 million. So about half a million. So no. About 50,000 on this crypto quant right here. At least what their numbers are saying. That measure does not match the Into the Block number because they are saying that they're currently sitting at 1.9, and CryptoQuant is saying 1.81. So even the two different sources are not agreeing here on how much Bitcoin is being held by Bitcoin miners in reserve. It is very safe to say that miners are selling at the moment, but the total number is less clear. For instance, they could be using Bitcoin for collateral on a loan. So if you're using Bitcoin for collateral on a loan, you're going to change it. You're going to not send it to exchange, but you're going to send it to maybe a custodian, a third party that's going to hold it as collateral for a loan. And who knows how these numbers are being gathered by these metrics places. And so we don't know exactly what is being sold. Anyway, that would look a lot like a sale to these blockchain-derived measures. Okay, that's it for Bitcoin mining headlines. Let's take a look at the hash rate difficulty. Hash rate has collapsed with this recent price dip. Difficulty did adjust downward very slightly, but the price dip over the last week has taken a heavy toll. This has also been met with significant selling by Bitcoin miners that has put some more pressure on the price. This is turning into a very important capitulation event. Let's open this up. You can see, boom. Wow. And that's the 7-day average too. So, I mean, that's a very significant move on the hash rate. All right. This is a temporary issue, though. This equipment did not blow up or stop working. The rigs were simply taken offline. They were unplugged since they were not profitable. Once the price begins to trend upward, they will be brought back online. So this hash rate is nothing to worry about. It's nothing to say like the miners are scared or something like that. I mean, the miners are just adjusting to big dips in price. And this dip right here on the far right, I mean, see that scale compared to this down here or this from the top down here. So this move is sudden, but it's not its size. It's not a huge size or anything. I mean, the next estimated adjustment for difficulty is -3%. So it's not that big a deal. Okay, mempool fees are extremely cheap, coming in under $1 for the next block. The mempool is slowly getting chewed through despite block times being approximately 5% slower. So, block times are supposed to be aimed at 10 minutes, but you can see with the hash rate going down, block times will be slower. But even with slower block times of roughly 5% slower, we're chewing through the mempool, which is very, very interesting. All right. Last section is layer twos, and this includes some token protocols here. So Bitcoin Lightning hacker Barack introduces new layer 2 rollups. And here's this tweet that he had announcing it, quoting from the article in the bullet point. Bitcoin developer Barack, who also created a Lightning Network competitor called Arc Protocol last year, has introduced rollups. So whatever happened to Arc? Didn't they have, like, somebody found some vulnerability and it just stopped the whole project, or are people still working on it? I'm not sure. People were very excited about it in the initial months, but maybe that has been figured out that it's a much harder problem to solve than they thought. I don't know, but he is out here doing rollups. I also saw Barack debating Thorchain. I think that's what it was, Thorchain or something, at one of the Bitcoin conferences. The Thorchain developer was on stage with Barack, and he was I think he worked for Liquid or for Blockstream, working on Liquid or something like that. And he was debating this Thorchain guy, calling him a shitcoiner and stuff. And I thought it was hilarious because this young guy, and this other guy on the stage with him was obviously a slick, like, car salesman, right? And he just tore him a new one. But anyways, Rollup is a layer 2 that offers a Bitcoin native rollup design, bundling up transactions without needing to hard fork Bitcoin or issue a non-Bitcoin token, explained Barack. So this is a very important issue, and that he's saying this means to me that he is a very, very hardcore Bitcoiner, because only a hardcore Bitcoiner would know to mention this. issuing a non-Bitcoin token completely changes the incentives of what your project is doing, and most likely means it's a scam. It doesn't have to be a scam if it's like intentionally a scam, but it's a scam in that that token will end up rugging people. So it is a scam because the tokenomics will not work. People will end up getting hurt, and even though you have the best intentions, it won't turn out the way you think. That's why it is a scam. Even well-intentioned people are scammers because if they run an altcoin, they're a scammer because it's not going to turn out the way they think it is. It can't work out that way. So anyway, it's very important that he said that. Rollups will aim to support more than 90% of use cases in DeFi when it eventually launches. Whether it's listing an NFT for sale in exchange for Bitcoin, where the buyer pays with Bitcoin upon execution, or placing a token sell order on a decentralized exchange, all of this is atomically executed, verifiable, scalable, and enforceable on Bitcoin. Uh, that sounds cool, but it's obviously not for sure. So, just like Arc, a lot of stuff was promises were made about Arc and the way it worked. They don't know at this time, but they at least should say, like he did here, saying non-Bitcoin token. That was very good. He should say, like, we think, or it seems to be, that they will be atomically executed, verifiable, scalable, enforceable on Bitcoin. But anyway, let's continue. Rollups will be managed by operators who will provide liquidity to the protocol and advance the rollup state by chaining Bitcoin transactions at regular intervals. Transactions will be executed on the Bitcoin virtual machine. I don't like this. This is just a bunch of woo woo. You know what? The longer this goes, where there's no like real concrete layer 2 solution, because lightning is a solution, but it's not catching on. It's not product market fit. It's got some problems, and the side chains are not catching on because they're federated versus decentralized, so there's trade-offs. It just seems like there's not a lot of Bitcoin layer 2 stuff catching on. Arc didn't catch on, yada yada yada. I just wonder if like centralized solutions is going to be what gets adopted by the masses, not by the top, Pareto distribution, not the top 20%, or even maybe a super Pareto distribution like 96%, or top 4%. Top 4% are not going to have to use third parties, but the 96% will. And I don't know. I don't know how I feel about that. It doesn't feel right, but I think that's how it's going to happen. And anyways, it's not worth fighting because the harder you fight it, the worse you're going to make Bitcoin too. Okay, runes and tokens. The number of runes transactions has fallen once again. Yesterday only had 41,000. Our proxy for speculative interest in Bitcoin is telling us no one is interested. And you see that I link to that source. For the inferior inscriptions, they have managed to maintain a low level of transactions despite interest being taken massively by runes. Yesterday, there were 11,000 inscriptions. So, nothing exciting going on. No speculation really happening. Let's go and check the comments. No more comments from there. 242 people watching. What's up, guys? This is Ansel Linder with Bitcoin and Markets. Check out my YouTube and my Rumble. They are linked in a tweet that I just sent out, also in my pinned tweet on Twitter. And if you guys jump over there to YouTube and Rumble, please comment, like, subscribe. I go out live streaming 2 to 3 times a week, and I put out this free Bitcoin newsletter. You guys can subscribe at bitcoinandmarkets.com. You check out bmpro.substack.com. I also write for Bitcoin Magazine. Sorry for feeling under the weather a little bit today with my voice, but I think we got through it okay. Let me check to see comments on No comments. Let me check this way. All right. Well, that's going to do it for today, guys. Thanks for joining me, and I'll see you on the next one. Bye.